The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have Rich Anderson as our guest today at 9:30. But before we get to that, I wanted to talk a little bit about Garrett's book, the Thrust Method of Profits. This was the book that came out at the same time that the book for Profits of Magic of Stock Transaction Timing by James Hurst. They came out at the same time. The difference, of course, was one was $29, which was the Garrett book, whereas the Cycles book by Hurst was only $8.95. Anyway, interesting story. That was since they only had 200 copies of that book, it was a very rare book. In 1983, I was in Las Vegas with some traders from the Merc, and we were there to play in a poker tournament. Hold on one second here, folks, and we will get this set up here. And I want to post this chart because I'm going to be talking about this chart in this book. We were playing in a poker tournament, and one of the traders there from Las Vegas was visiting us, and he had a very extensive library, but he wanted one of my books that I had that was a relatively rare book. I had two of them. That was The Man in the Cosmos by Clifford Matlock. It's probably one of the better books in astrology, but it is really a hard book to find. And he wanted to trade me. He said, I'll let you have any book in my library. He said, if I can have a copy of that book. And so I said, well, let's take a look at what you got. So I went through and looked, and I saw this one book. And I said, I think this looks pretty interesting. He said, no, not that book. He said, that's not included. I said, what do you mean it's not included? You said any book I wanted. And he said, yeah. I said, well, do you want the other book or not? I said, I think it's the one I looked at. He said, okay. So I got the book. It had a lot of stuff in it. But on this page right here is page 89. Okay, and I'm not the sharpest knife in the drawer, folks, when it comes to higher mathematics and stuff. So it looked interesting to me, but I couldn't quite figure it out. Well, about 5 years later, in 1988. I'm up in Pismo Beach, and I see that book, and I happen to be glancing through it, and I saw this page 89, and I saw these Fibonacci numbers, and by then I'm working with Bryce Gilmore all the time with his Wave Trader program. And so I copied this page and then on the old thermal faxes, and I faxed it over to him in Australia. About 2:30 in the morning, California time, I get a call, and he's, hello, mate, what's up? And I said, well, how you doing? He says, where did you get this chart? And I told him the book and everything. He said, let me tell you something. He said, this is what I've been looking for years. He said, this is the secret to squaring a circle. And he said, this guy had to be a real genius. And I said, well, I'm glad you think that. And he said, look, I want a copy of that book. And he said, I want it as soon as possible. And I says, okay, when I get up in the morning, I said, I will copy it and fax it to you. He said, no, I want it right now. I said, it's 2:30 in the morning. And, Pismo Beach doesn't have all-night printing and copying places, but we did have the university there. I happen to know the person that ran that part, so he opened up the place. I copied it all on regular paper, and then we thermofaxed it over to him in Hawaii, and he called me back about 5 hours after he had it and said, I'm on my way to California. He said, I've made contact with his wife. Clarice Garrett was living in Ala Moana, in the Ala Moana apartments there in Hawaii, and she was coming to California for 3 days. Bryce had paid for her trip to come there so we could talk to her about her husband and stuff. But anyway, the secret to this, and believe me, folks, it's a big secret. If you'll see that arrow where the 1.618 thing is right there, that distance between the circle, the square, and the ellipse, that's the secret to squaring a circle. He said that ratio is 1.12, and he said that was important. Well, might be, but it's still over my pay grade. Anyway, that's really what it was. But anyway, it was really really something to go through. Anyway, it's very interesting to see it all unfold like this, and we'll see how it. You don't really have to understand it, folks. It's really, pretty. If you want to, just get the book. It's called The Thrust Method of Profits in the Stock Market by William Garrett. I have a copy of it, and anyway, that's basically it. It is a common fib number. The fib numbers build, they go from 1218, 127, 1.44, 1.618. But he was very excited about that, and I was glad to bring some excitement to him because he was a really smart dude, Mr. Gilmore. Okay, now let's move on to some of these markets. As I mentioned, we're going to have Rich Anderson on at the break, which will be a lot of fun. I want to talk just a second here about this chart that I got from one of our good friends at the Elliott Wave Theorists. This is a chart that shows that the fact that these mutual fund investors are shunning cash, they're buying shares. I don't know if this is right or not. And the reason why I say that is the volume is so down in the stock market, for one thing, and the other thing is that the number of new highs to new lows is going down, not going up. So I really question this. I do like the wave structure of it, but I certainly question, the theory behind it. Now, I'm just bringing that to your attention. That's my job here, is to try to bring a little bit of happiness into everyone's life, so we'll keep an eye on this. Okay, let's take a quick look at something that's really rocking and rolling today, and that is the gold market. Where are you, gold? I just put it right here. If you remember the other day, we were looking for gold to get up to this. This was as of Friday. We'll put this up here. We're looking at this level right here. We're looking for a possibility of 1380. Folks, we had 1362 last night. We're $18 away from that puppy. And that is a very, very strong move. Now, I want to bring the gold chart up that we've been watching, this 4-hour chart. And I like 4-hour charts because you get to see several months. You get to see all the small swings, and that makes it, a lot easier. But if you look at the gold here on this 4-hour chart, you'll notice that since we bottomed back in July, at that 1206 level, that was a big ABCD pattern. As you remember, we became quite bullish at that point, and now we've had these moves up. Since that time, we've only had 1, 2, 3, 4, $18 to $20 corrections. That's all we've had. And now we're due for another one. You'll notice that we're right up at that 1.618 level. And if you looked really closely at this chart, I'll leave this up to you folks because we have limited time today because of Rich Anderson. If you look really closely around that point D at the 1.618, you can see a pretty distinct 3-drive to a top pattern. That comes in at 1362. But, frankly, I would be expecting a pretty good correction sometime, whether it's going to be 18. Remember, 2 times the 18 would be 36. The harmonic number in gold is 34. So I would think that we would get at least a $34 correction sometime along here. We haven't even made any significant retracements, folks. This has just been a straight up move given, what's going on. And with the U.S. dollar getting smashed, it's pretty interesting. We're going to take a break here, and we will take a look at Treasury bonds when we come back, Tony. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at the Treasury bond market for one of our favorite people out in California. Anyway, as you can see here on the Treasury bonds, we've just completed today at this right near this 159 level. And you remember that 158.24 was that level we were looking at. Now, I keep September bonds as a data, and the reason for that is because the price difference between the September and December is not always as clear as it is in the spot month. And so I keep the spot month all the way up until expiration, and that gives me a better idea of what's really going on. Otherwise, you'd have to look at the cash T-bond market, and since I don't trade that, I'm more interested in what I'm looking at. I watch this September, but I'm trading the December because that's the one that's telling us that the one you should trade. So anyway, as you can see here from this Treasury bond chart, this has completed an ABCD pattern. That big red line, the Thunderbolt, the Gartley pattern, ABCD, whatever you would like to call it, that has completed now. The only thing that's a little troubling, and the fact is, if we look at the cycles we had a perfect fit at the 1.27 level, and the market backed off a little over $1,000 from that level, and then over the last day or two has returned and gone into new high, as you can see. That doesn't trouble me as much as the pattern itself, because the ABCD pattern could have been the reason why it was reaching up there. But anything above what the high we made last night would certainly tell us that this thing is probably going to go higher. Now, the thing that I be concerned about if you're doing the Treasury bonds is the old safe haven flight to quality story that we hear all the time, and that is if stocks get really weak, then you're going to see a drop off. In interest rates are going to start going lower, i.e., the bonds and notes are starting to go higher. But believe me, folks, to me, that would be flight to quality would be like putting gasoline, trying to put out a fire. That's the way I look at this. If we take a look here at the Treasury bond note, now this is a long-term chart, folks, going back the last 7 years. And as you can see, we topped in 2012. Interest rates made their low back there. Now, short-term rates have gone lower, but the notes, which are, the 5 to 10 year to 20-year paper, actually it should be 5 to 10 year for notes, and bonds are 10 to 30. Anyway, you'll notice that we made that 382 retracement. We're back up to that same level again is really what we're looking at. And I guess there's a possibility, that we could get another few points higher in notes, which would be about 5 or 6 points higher in the bonds. That's why at this point, the amount that you have to risk in the bonds is rather small. But as I mentioned, the real danger here is if we get a flight to quality, if stocks do start to sell off, and boy, I really think we are, because let's just, we're going to have Rich up here in a few minutes, so let's get here to take a look at this picture in the Bradley model, because boy, it's one picture's 1,000 words. This would be it. This is it, folks. We're coming in. This is the 8th. We're coming in on the 11th, which is Monday. So that's going to be a very interesting thing to go on. By the way, there was an 8.1 earthquake in southern Mexico near Ecuador last night. 8.1, folks, that's a big earthquake. I've been in 2 7-point earthquakes in California, and I don't want to be in any more. But 8-point, I have no idea how bad that could be, because they go exponentially. And that would really be something, very, very dramatic. So let's pray for everyone that nobody, has any more problems. But we got a lot of natural disasters going on with hurricanes and earthquakes, nuclear bombs going off. Not a time to be a fun camper here in the old Pueblo. Okay, I wanted to spend just a second. Someone's had a question about natural gas, and then I will cover a couple of currencies here before we get to Rich Anderson. If you'll notice here, natural gas, if you'll get ready right here, you'll see that we've had a beautiful ABCD pattern form a few days ago up at that 307 level. We've dropped about 10 cents from that level, so that's pretty much what it really is really going on. In fact, I don't know. I think we had an earthquake down in Chile that was almost 9, as I recall. That's basically, I could get in touch with my friend Patrick McGuire over in the UK, and he would know that, because he's an astrophysicist and he understands all of those things. But you don't want to be in earthquake. Hey, folks, let me tell you this. I've been in earthquakes and I've been in tornadoes. Let me tell you something. A tornado is an earthquake magnified. You don't want to be in a tornado. Tornadoes destroy everything. But the bad part about the earthquake is the noise. The noise is just absolutely deafening. And but the danger, the damage is in the tornadoes and typhoons and stuff like that. Those are the real monsters, as you can see from what happened in Houston, and now Florida is getting attacked all different ways. So that's another interesting one to look at. Let's take a quick look here at the S&P today. I listened to Basil. He had some really good points, and I can see what he was saying about the S&P down about another 10 points or so. It would certainly have a negative picture. On this particular pattern, you can see the Gartley that formed at the 2456 level. We're trading now around 2459, so that is held. It's Friday and an up week, so you could toss a coin and see where it's going to close, but any close below 2450 would tell us that we're most probably getting ready to head lower. But we should have a very, very active week coming in to next week, given the fact that where this Bradley model is. But the Bradley model is far from perfect, folks. And one of the greatest disappointment you have is from unfulfilled expectations. And so if you're expecting something to happen and it doesn't, you're not very happy. So don't expect it, just react to it. That's what I'm going to try to do, and believe me, that's not an easy thing. So we start down on Monday. That's going to be telling us, yep, that might be it. And I'll be on the air on Monday, so if it's up, you guys can get your vegetables out and fire away at this stage, and we'll see if we can make a nice Cobb salad out of all of it. But anyway, that's what we're watching here in the stocks today. Remember, 10 points lower in the S&P, would, especially closing down there, would suggest that we're getting ready to move down lower. Now, the dollar, they're talking about the dollar, of course, and the dollar is hands down not getting crushed. It is getting absolutely massacred. And if you remember, let's just look at a couple of them here that are really interesting to me. One here is this Japanese yen, because it is at the proverbial, if you like patterns, the Japanese yen is really setting at the proverbial moment of truth down here at this 107.30. We hit that 1.618 expansion. We hit the 1.27 expansion. We have a 3 drive to a bottom pattern. We have multiple ABCD patterns. I mean, if we see a print under 107 in the yen dollar, you're going to see well, it'll go lower. Let's just put it that way. But at this point, we could get a little bit of a bounce. That's what we're looking at. In the euro, if you remember, we got to take a break. We'll be back with Rich Anderson, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member, FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have our good friend Rich Anderson on the line today of Anderson Capital Management. Rich, are you there?
Yes. Good morning, Larry. How are you?
Pretty good. Are you in Florida or are you up in Minneapolis?
No, I'm in Minneapolis, so I may have to go down to Florida to check on my house next week.
Yeah. You don't think it'll float away, do you?
No, but isn't there a full moon or something? And
yeah, the 6th.
High tide when this thing is hitting some of Florida and the full moon. That, you know, remember on D-Day, the boys went in and it was the highest tide of the previous 4 or 5 years. They hadn't taken that into calculation. So the hour that these hurricane hits, based on where the tide is, will determine some of the damage, not to mention just the track that it takes. So anyway.
Well, I chatted with Norm Winsky. Norm lives in Naples, and
did he take off?
No, he's there. He said he's filling sandbags up and putting them around his little pueblo. So we'll see what happens. But our prayers are certainly with you guys that you come through. Now, I heard a little bit of news that the fact that it was moving east as opposed to west. Is that true?
That's what I'm thinking. But I mean, this is such a huge storm that it's way wider than the state of Florida. So even if it moves east, it's and the west side of the storm is always the least, strong, is less strong than the east side of the storm. So, but it's going to shake things up. There's no doubt about it. The one that's definitely moving to the east is Jose, the one behind it. That looks like it'll track more into the Atlantic.
Wow, that's amazing. All right, let's start off with the corn today, if we could. Rich, you want to give us an idea of what's going on in the corn market?
Well, I mean, there's a crop report next Tuesday, and the boys have, they pressured it into option expiration. Isn't that a brand new feature? That always happens.
That's for sure.
And then there's short covering. Interestingly enough, it bottomed within a day or so of when we bottomed a year ago. And then a year, not that there's the same year. Every year is different, as you know, but it's kind of coincidental that happened. Now, last year we rallied about 25 cents, and then we came back down and within a dime of the previous low, and then we started to work higher on the September 30th stocks report. Now we have the WASDE supply and demand on Tuesday. The guys don't want to be too short. And then the other feature is with the weak dollar. The way the dollar's dropped, that makes all of our commodities cheap.
Yeah, it sure does.
Drops, 1%, the commodities should all be up 1%. And, roughly, they're not even doing that yet today. So there's just a lot of people getting to the sidelines. And I've been home for the last week, and the interesting thing watching these commentators on television, they don't really get that the market can go two ways. Now I'm flipping back to equities when I'm talking about this, but they actually smirk and deride people that have mentioned that markets do go up and sometimes they go down. But a lot of them don't seem to think that that's a possibility anymore, and that always makes me a little nervous. I just wonder, I've got lots of things I'm wondering about right now. Harvey was a bad storm. This one looks like a nasty storm, and the Atlantic is still warm, and who knows how many more. And, when is one more storm going to be too much? We have Kennedy had the Cuban Missile Crisis. We have a crisis right now. Is our current administration going to be up to the task? And
that's for sure.
We aren't necessarily dealing with a logical person on the other end. The flip side is that I don't know if you noticed, but Mexico kicked the North Koreans out yesterday, and the Chinese now do more trade with South Korea than they do with the U.S. So, whatever Trump wants to think, he has very little influence over how China deals with this situation. But their main thing is economics, as you know, because you've visited there many times. And so if their major trading partner is being threatened, South Korea, then they're darn well going to do something. And what I'm hearing, and of course, I don't have any ties to intelligence, but what I'm hearing is that the Chinese telephone company is being used to track who's doing trade with North Korea to pressure those guys to, pressure the government. But does the government really care? I mean, the average North Korean is many inches. I hear up to 9 inches shorter than South Koreans because their diet is so poor. Can you deal with a person that doesn't care?
Well, that's for sure.
Which one of these things will be the thing that breaks the stock market?
Yeah, well, if you mean to have a 1% correction, possibly.
Yeah. Yeah.
Yeah. Rich, what about the cattle market? That's one of the ones that we've had a pretty strong interest in here in the den for quite some time. And I was just curious if you have, I'll put the chart up so the folks could, we had a pretty good, we had a hit almost limit up yesterday, I guess, in October cattle. And backed off a little bit. But what's your feeling about the cattle here? This is the first big ABCD correction we've had. And you remember you were on here about a year and a half ago when cattle were at the cost of production. And from there they moved 40 cents, I bet 35 cents higher. And now we're at this big ABCD. Is there any chance for the cattle to poke its head up and have a rally here?
Well, the email I sent you the other morning was that, the key thing was the October, because the differential between October and Dece at $5 at some point, it used to be $4, and maybe it's $6 today. Back in 09, I believe we got to, August of 08, I think we got to $6 on the August stock. At some point, there's enough dollars more that you're just going to feed your cattle another 30 days or so. Now, the weights are actually 9 pounds under a year ago, so there's some room where you could, hey, it's $5, $6 more to hold it for another 30 to 60 days. I'll just feed them a little bit longer. Mm-hmm. And that's what'll do it. Now, the thing, these markets are all about money flow, and the Goldman roll starts, today. It might have started a little bit yesterday, but today for sure. You want to explain to the folks what the Goldman roll is? Well, Goldman Sachs is a big New York house that has a Goldman Sachs index, and you can buy that on the Chicago Mercantile Exchange, and they make a market by having X number of contracts of each of the commodities: the cattle, hogs, wheat, corn, beans, meal, or not meal, but crude oil, and by prospectus they roll between the 5th business day of the month preceding. So for October cattle, they roll the 5th business day of September through the 10th business day of September. And previously, the guys on the floor would all get lined up so that knowing that they would have to sell their October and buy their December. But sometimes they get lined up too much, and Goldman's gotten a lot smarter on how to roll, and then you see what happened yesterday. So they have to move their contracts from October to December by prospectus. And that's just money flow, and money flow is what rules these markets these days, and that's why momentum trading seems to work the best. All right, stay with us, Rich. Rich Anderson of Anderson Capital Management. We'll take a few minutes here, and we'll be right back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, with Rich Anderson of Anderson Capital Management. Rich, could we talk just a little bit about the U.S. dollar? You mentioned about, the dollar getting weak. It makes commodities cheaper, but, they don't seem to be bouncing very much in the grain markets and the livestock.
Well, there's first of all, we've got harvest coming on in beans and corn, which is traditionally the weakest time of the year. And the people don't know exactly, is the yield 164 bushels per acre or 168 for corn? What's the government going to say next week? Is it 47 bushels an acre for beans, or is it 49 bushels an acre for beans? Or we've got increased supply, we've got increased demand. I think in the next couple of weeks, because of the weak dollar, you'll start to see the U.S. get some of the wheat sales to the world. Russia's gotten a lot of the wheat sales recently, and I think you'll see Egypt start to go to us because our dollar makes us attractive versus Russia or French wheat for that matter. But once we get through the middle of harvest and we got stuff locked up, we're already starting to see the basis start to firm up in the Midwest for these grains. Not much, but a little bit. And that usually doesn't happen until you're at least through the first half of harvest and getting towards the end of harvest. Because no farmer has enough storage for everything, so there's some of their crop they have to sell, and that's what causes the weakness during the harvest time period, because that's when the biggest bunch of it moves, and then it goes into the bends, and it's not going to move until they like the price better.
Well, what about the fact that this weather coming through the Gulf for shipping, grain down the Mississippi and stuff? Is that a problem? And could these hurricanes affect the weather for taking crops out of the field and stuff? And what do you feel about that?
It's definitely. I've been thinking about that a lot. We don't grow nearly as much in the Southeast as we do in the Midwest, but Georgia, Alabama, the Carolinas, there's a little bit of beans, and even that little bit being affected can mean something, because the commercials are all lined up anticipating that I'm going to get this much out of this state and this much out of that state, and all of a sudden they can't because the storm has, wrecked it, or because the transportation has been wrecked. You're wrecking supply and you're wrecking demand. You're wrecking demand, and the Harvey people, they can't eat what they were normally eating, so that's wrecking demand. It didn't hurt very much supply. Transportation is a mess. These refineries coming back online, they need to get parts and stuff, and they're having trouble getting the parts, and the transportation is iffy, and now we're going to have this whole thing. So you got two sides to the coin, and people are trying to figure out which is impacting most. The packers got huge margins, so they can afford to pay more for cattle if they wanted to. If they had the same margins a year ago, these cattle would be a lot higher priced. Today, I'm looking for the Octobers. If they closed above 107.35, they're going to probably retest that 109.80 to 110.35. The hogs, I think they rallied the last couple of days on ideas that the hurricanes would affect all the hog production that's in the Carolinas, which has happened in the past. That's the kinds of stuff that the fundamentalists are thinking about, and because it's weather and Mother Nature, it's a toss-up. And then Mother Nature can all of a sudden, these storms aren't going to affect the Midwest, but they could also create some storms that in the middle of harvest, all of a sudden we're getting a whole bunch of rain, and then you've really got a problem. And that's the thing I'm thinking about. So the crop report on Tuesday rules.
Okay. Now, we've had a question about one of your favorite things. That's Dr. Copper. And that thing has had one heck of a move here. We've gone from 285, to 315 here just in the past month. And what are you hearing about the copper market?
Well, there's huge demand in most of the world. Their economies are doing better. I mean, take the euro. EU is doing way better than anybody anticipated, particularly a year and a half ago. And everybody's still on stimulus. Draghi this week said nothing about cutting back on their stimulus. And they're going like crazy, as you can see by the euro dollar. And, they don't want that currency going straight up and the dollar going straight down, because their export economies get affected by that. But that also is very stimulus to the actual building of an infrastructure, and that's the demand for copper. That's real demand. It's not stockpiling like we had a couple of years ago when China was stockpiling copper. It's actually being used now.
Okay.
And we've yet to do the infrastructure here, but we will.
Rich, how about the Treasury bonds? I mean, we've got yields here that are higher than all of Europe, and yet people are not clamoring. With the dollar getting cheaper, that would even make it a better deal for them, wouldn't it?
Right. The bonds. My view is that the bonds and the gold are risk-off strategies, and the yen. Those three. So you're getting out of stocks because you don't know what's going to happen. You go into bonds, yen, and gold. You don't know what's going to happen with Korea. You go into bonds, yen, and gold, and you'll see the yen has been relatively strong, gold's been relatively strong, and our bonds are higher than any deal you can get in Europe. So it's just it's the only game in town. So when you want risk off and go to something safe, you're going to the U.S. bonds. Now it seems like today they aren't in a hurry to get into them. I mean, they were higher earlier, but now they're drifting a little bit. But that's kind of what's been happening. It's all about money flow, and it's massive amounts of money, and you're going to see some re-asset allocations by these major funds. They do it on a quarterly basis, and as we get into the end of November, early December, when these committees meet and do their asset allocations, I think you'll see that money will be flowing, into the commodities.
Rich, we have to put you on the spot here. One of our listeners is asking us, what do you see as the best trading opportunities here in the coming couple of weeks? Silence from your end, my friend.
The trade that I'll probably be doing is the ARC Feb cattle, which I kind of told you about on when I emailed you. Because that's a traditional trade, but that's not for everybody. That's not a trade you'd recommend to your average person. After you see the crop report, I might have a view. I guess if I were to pick something, I'd be probably looking at going out into March contracts of sugar or Minneapolis wheat.
Okay, Minneapolis wheat.
And I know nothing about sugar. The biggest unknown is Korea, and how many more of these hurricanes are we going to have to endure after this one? And does it eventually affect demand for more than a couple of days? And then if it created storms in the Midwest, I mean, then all of a sudden, I'm short term right now. I'm, 2-3 days is a long term trade right at the moment.
That's the best way to be, because with the fact that the extra I can't even think of the word, the things outside of the market that affect us can happen very, very quickly. The market gaps down 20 points Sunday night. By the time you come in Monday morning, it's unchanged. So there's a lot of things going on here. Makes it better to look at short term. Rich, thanks for joining us, my friend. Travel safe, and I hope everything goes okay down in Florida for you.
You bet. Thanks.
Yeah.
Have a good
May
weekend.
God bless.
Bye-bye.
We'll be right back, folks. Pay a few bills. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I guess I'll leave you with what I think is the most important thing to keep our eye on, and that, of course, is this Bradley model that we're looking at coming in here this week. This is going to be real interesting. And remember, unfulfilled expectations are the source of our frustration. So don't expect too much, but if it happens, you might want to pay a little bit of attention to it, because you see the Bradley model, when it does work, it works very, very well. And that's what we're watching here. There's enough things in the news to make these things go to areas we haven't seen before. For instance, if we were to make a truce with North Korea, that probably would send the market up 1 or 2 or 3%. And if these storms abate a little bit, that would also help a little bit. So we don't really know, what's really going to happen. So just pay attention, and as Rich said, be quick on your feet. You don't have to be in things for 2 or 3 months at a time. And if you use options, sometimes that can give you a little bit of flexibility, but many times the option premiums are a little too expensive. So let's watch that very closely. Also, say a few prayers, folks, that are having a lot of trouble in their lives, as you see on TV all the time. It really breaks your heart. You can't help anyone, but maybe you can help one or two people along the way. That would really be good. I'll leave this NASDAQ chart here with you to take a look at, because you can see the resistance that we've got here in the NASDAQ up around this 59.80 level. I believe we're trading around 59.50 around that level right now. So 30 points higher than NASDAQ brings in some resistance, as does the level of 2472 in the S&P, and we're trading at around 2459 right now. I expect Sunday night to be pretty active coming into this September 11th time frame, but next week is going to tell us which direction the market is going until the mid-October. That's my opinion, of course, and opinions are like armpits. Everyone has one. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.